There is not much that can stop the U.S. consumer, according to the March retail sales report. It's Wednesday, April the 22nd, and this is Markets with Megan. If you like this podcast, you can subscribe, hit the alarm bell, share it with any of your friends, your colleagues, family members, anybody who's interested in what's really going on with the economy. We get regular economic data that gives us insight into the direction that we're going. And today we're going to focus on the consumer. So let's dig right in. The March retail sales report was much better than was anticipated. On a month-over-month basis, the retail sales at the headline level, so that includes all items, that rose 1.7% for just the month of March. It was the biggest monthly increase in 12 months. The expectation was that we would see a 1.4% increase. Now, that headline number was primarily due to about a 15% increase in spending at gasoline stations. And sometimes when we look at this, we will X out volatile items because that headline number may be misrepresenting the strength in the consumer. But when we strip out items like autos, like gasoline, building materials, food, still very strong numbers. So let's look at just Xing out autos and gas. Retail sales rose 0.6%. The expectation was for them to rise 0.3%. And when you X out food, gas, building materials, autos, it rose 0.7%. It was the biggest rise since August of 2025, and the expectation was only for a 0.2% rise. Now let's look within the details at what consumers are spending money on. You're seeing very discretionary spending in the month of March, meaning that some of the things like furniture, electronics, going out to eat, spending money on the internet, these are all big drivers. Furniture spending rose the most since December of 2024, as did spending on food and beverages. So this is a strong report. There's not much that I can say negative about this report. But why did the consumer spend so much in a month where we were dealing with the war in Iran and sky-high gasoline prices? Well, don't forget that we have tax refunds. We got a lot of tax refunds in the month of March, and tax season is now officially over, but we did see a very big increase on an annual basis in tax refunds. So that money looks to have been spent. Consumers are looking like these spikes in gasoline are temporary because they were spending quite a bit in the month of March. The last thing I'll say about this report is remember, it is not inflation adjusted. So what we will do is we'll look for some more indication on the consumer, the health of the consumer. This report does not correlate with the really weak consumer sentiment that we got, because weak consumer sentiment is not having consumers avoid going to the stores. That's all we have today. If you want a history of our podcast, you go to marketswithmegan.fm. Thank you.